In today's class, we are taking a brief look at shares, bonds, and debentures. A share is a unit of capital measured by a sum of money which is an individual portion of the company's capital owned by a shareholder. The owner of a share in a joint stock companies is called a shareholder. Two major categories of share are ordinary shares, also called equity shares, are the shareholders who are the real owners of the business. Ordinary share is subdivided into two. Deferred or founder share is the shareholder who is entitled to the remainder of the profit after all other shareholders have been paid. Preferred ordinary share is the shareholder who has preference over other classes of ordinary shareholders. Preference shares are the types of shareholder which have priority in terms of divided payment and repayment of capital in the event of liquidation or winding up of the business. Subdivisions of preference share are as follows. Cumulative preference share has priority in the sharing of dividend over others and entitled to collect arrears of dividend. Participating preference share, the shareholder is entitled to further percentage of dividend apart from their fixed dividend. Redeemable preference share, the shareholder has prior claims to dividend before all other preference shareholders. The owners of the business can buy this share back after some times. Non-cumulative preference share, the dividend does not accumulate from one year to another. Non-participating preference share, the shareholder is not entitled to further dividend after the ordinary shareholders have been paid. A bond is any interest-bearing or discounted government or corporate security that obliges the issuers to pay the bondholder on specified sum of money annually at a specific intervals and to repay the principal amount of the loan at maturity. Types of bonds are bearer or registered bond, secured bond, convertible bond. A debenture. A debenture is an instrument or a loan certificate for raising a loan, term loan from the public by a limited liability company. A debenture is a debt and a debenture holder is not a co-owner of the business but a creditor. Types of debenture are as follows. Mortgage debenture is a debenture which is issued on the security of the company's property or fixed assets. Floating debenture is a debenture which is not attached to the security of any company's asset or property.